Thanks for taking the time to listen in. This is Simon Giannini, and this is another in the series of the Mastermind Seminar Series. Today's topic is understanding how to use your RRSP to invest in real estate, and this seminar is targeting real estate and probably mortgage agents as well, and understanding the opportunity for us to introduce this to our clients. And joining me on the line, of course, is Jonathan Weaver with RRSP Safe Haven. Jonathan, are you there, buddy?
I am so.
Welcome to the call. So we're going to be a little bit more brief than we would be in, say, a live seminar when we have the opportunity for question and answer, but we will give you enough of an overview to see an incredible opportunity for us as agents, either real estate or mortgage again, to have another revenue stream with a fantastic opportunity. So first up, this is the agenda of today's webcast. We're going to talk about the program, and essentially all you have to do is think about who your clients are that would be interested in this kind of a program. You invite them. We'll do the presentation, and you get paid. We're also going to show you a sample of a brief sample of the public presentation. In other words, what would clients see in a one-on-one meeting or a live seminar? And then also, I want you to listen for it. Does it make sense for you personally? I know a lot of us have RRSPs. If you're investing personally, this may also be something that you'd want to consider for yourself, especially since we'll get the high returns that the investment offers, as well as getting paid commission on top on our own investment. So it really is a win-win-win. So, what is the opportunity right now? Well, commissions as high as 4%, really with very little work, because all you have to do is introduce your client. And investors are often repeat clients. And what I found is this: there's 38,000 odd real estate agents, and 5,000 odd mortgage agents in the GTA. We need something to differentiate ourselves, and by understanding investment opportunities such as this, we're positioning ourselves as experts, and this is going to get us repeat business. What about the opportunity? Is there a demand? Well, 73% of homeowners have 20% equity or more, and 43% of homeowners are mortgage-free, and most are afraid to invest in the stock market, so this is a great opportunity for them. So here is how the program works. Number one, the target audience. Here's your target audience. So you got to ask yourself, of everybody you know, your clients, your prospects, your friends and family, who likes real estate, who has retirement savings, and who's looking for a more secure return on their retirement savings? So, essentially, it's almost everybody if you ask, and if you ask in the right way. Number two, we'll teach them about private lending, and we'll give them an opportunity to take their money out of the stock market, and they choose the vehicle of their choice, and we'll show them specific projects one by one once they understand how the RSP investment program works. So very straightforward. And lastly, you get paid. The borrower pays us fees to find the lenders. In this case, the borrower is the developer of various projects, and the lender is our clients. Your clients, or it could be you, could be your clients, my clients. So your clients pay no fees to us. It's the developer that pays the fees, and as soon as the funds are transferred and the title is registered for your client, you're paid, which is often, I would say, what is it, Jonathan? Usually 2 to 5 weeks kind of thing?
Well, actually, if the money's already in a self-directed RRSP or in cash, it's in about 7 days.
Okay.
And if the money's in a regular RRSP, it's about 42 days.
Just to transfer into the self-directed and have the investment go and so on. Yeah.
Correct.
Okay. I like to under-promise and over-deliver. So, yeah, typically in real estate, we're typically looking at, I would say, 3 to 6 months to get paid. So hearing, 3 to 6 weeks is fantastic, and if it happens in a week, even better. So, is there a demand? Well, look at what Money Sense magazine reports. Median return of 2.3% a year over the last 10 years in most people's RRSPs. So, the question is, if your RRSP could act like a bank with the same security and earn a fixed rate of 8 to 10% interest, would you be interested? And I think most of us, would call it a stupid question. Everybody's interested in at least finding out more. Now, here's an example of one of the investment opportunities. So here is Martinwood Golf Resort, and I think I've got a map here coming up. Yeah, here it is. It's near Bancroft, so it's like an hour and a half outside of the city, maybe 2 hours. And essentially, the builder is looking for financing to do additional construction. The current value is $4.6 million. It's 800 acres, golf course on the lakefront, permits for 78 homes, and basically here's the math. They're looking to fund $2.1 million as a second construction financing, and the total loan to value is 67%. So as an investor, here's how it works. Once the units are sold, 100% of the proceeds go back to the lawyer in trust, which is approximately $190,000 each, And the money, once they're sold, the builder must either build more homes and improve equity or pay down the second mortgage. So it's very, very secure for the investors. Now, we're going through quickly because you're realtors and we're confident you understand this stuff, but we go through very slowly with the investors. Here is how the capital is secure. The total loan to value is less than 80%. It's a 3-year term, and it's a second mortgage on construction financing. So as an investor, your name is on title to the property. It's really as secure as it gets. And the return for investors is 2.25 quarterly, which means they're generating over 9% a year, fixed for the 3-year term. And, you know, if you ask most people what's more secure, a deed of land or a mutual fund, I think a lot of people have lost confidence in the mutual funds with all of the corrections that we've seen over the last 10, 15, 20 years. And real estate has demonstrated again, time and time again, that it is the way to go. So, you know, how do agents benefit? Well, very simply, we hold regular client seminars and webcasts. You invite your clients. You can attend with them, or you can just pre-register them, and they can go on their own. Either way, you're registered. You register your clients. You're protected. The program will be explained to them, and you get paid. And how we get paid as agents is 4% on every dollar invested. The average investment is $75,000. The minimum is $25,000. The maximum, there is no maximum. But if you were just to recommend an average investment of $75,000, if you could find one client per month, that's an additional $36,000 in commission in your pocket at the end of the day. And that's not a bad commission just to invite some people to a seminar. I mean, I would be calling everybody I know and, you know, bringing them en masse. Bring 5, 6, 7 people. Do it wholesale rather than retail. But here's what I want to do next. I'm going to give the mic over to Jonathan, and Jonathan's going to walk you through quickly. Jonathan, how long is the typical client presentation when we do it live?
Typical live presentation is about an hour, and obviously we're going to do a lot less than that because we just want to give them a brief overview. And the people who are interested will obviously register right here on this site as registered agents, and then they can get much more information.
Absolutely. So, I mean, essentially, I think what we're going to do is we're going to give them an overview, Jonathan, maybe just about 10 minutes, which is, you know, you're only going to see some of the information that we share with consumers. We walk them through. There's a lot of Q&A. We want to show you quickly. We'll try to keep it under 5, 10 minutes, you know, the kind of information that we're sharing with people. So, Jonathan, over to you. Here's your first slide.
Great. So when we look at a full public presentation, we're going to look at the plan most people were taught. We'll go over their current situation. We'll look at the market results for the last 10 years, depending on where their money's been. We'll look at having people question the status quo, not have them understand. You know, often people ask what the risks are of what we're purporting to do, but they haven't examined the risks of leaving where it is. And we'll actually look at the math so that they'll understand where they'll be 3, 5, 10 years from now if they stay where they are versus what we're suggesting. We're going to talk about other people who are making big decisions with regards to pensions and where they're investing. We're going to talk about real estate risks. We'll talk about the types of mortgages that are available for people to lend to. We'll talk about how their investment is secured, and then we'll bring them to a decision. And most people will come to one of 3 conclusions. Number 1, this is really interesting. I didn't know anything about this before, and it's really not for me. A secondary group will be those that say, wow, this is fantastic. How do I get started yesterday? And unfortunately, we can't go backwards in time, but we can get people invested immediately. The third category is probably the biggest category. And what we end up with is people who say, I'm ready to do this 100%, but if you could answer a couple of personal questions. So what we'll do is we'll meet with them face-to-face, and if we answer the questions to their satisfaction, they participate, and if not, we give them permission to change their mind in the future.
Mm-hmm. So, you know, here's the plan. So I'll let you continue with this.
Sure. So the plan was that, and I'm sure Simon, you were taught this as well. The plan was take 10% of whatever you make, stick it in a mutual fund or a segregated fund, and between dollar cost averaging and the natural growth of the market, you'll retire healthy, wealthy, and wise.
Yeah, it hasn't worked for me, buddy.
Well, the sad truth, there are some who have had that experience, but for the vast majority, the market hasn't cooperated. In fact, I had a client recently. We were doing the one-on-one meeting, and they were really excited about the financial planner, mutual fund salesman they had, only to discover that their agent only had access to 25 of the 107 funds. So what was interesting was, statistically speaking, they couldn't possibly have been in the top 5. So if we look at the last 10 years, by the way, this report is by Dan Bortolucci, senior editor of Money Sense magazine. He actually has a private blog called the Canadian Couch Potato, which we actually provide people with a link, and you can see it here. He actually points out that the #1 fund from 2000 to 2010 paid 10.55% every year. Now, Simon, if you had gotten those results, you probably wouldn't be attending this webinar, true?
Mm-hmm. Yeah.
Here's the worst news. By the time we get down to #5, it's down more than 4% to just 6.34%. Now, the good news is most people, statistically improbable that they were in the bottom 5, but the bottom 5 actually lost money every year. So as fast as you were putting it in, they were losing it even faster. So it was compounding downward. If we look at the middle performer, literally 53 funds did better, 53 funds did worse. The middle fund is the TD Smart Fund, and it made just 2.13%. And if you look at it after inflation, you still lost money. So let's take a look at the status quo. I mean, one of the things we get people as retirement planning goes, in the last 3, 5, 10 years, how many times have they heard it's on sale, or there's been a correction in the market, or it's a good time to double down? What we really want them to understand is, how confident are you that when the next statement comes in, there won't be another correction? In other words, something happened in Greece, and I'm sorry, but it's temporary. And the problem is most people need to move up, not down. So we ask them to pose this question of themselves and their financial advisor. What's the forecasted returns for 2012, where you are right now? If you stay on your current plan, where will you be 3 years from now? Where will you be 5 years from now? I want you to, based on a 2.13 average return, I've marked it up a little bit to 2.5%, and say even if you got 2.5%, it takes almost 30 years to double your money, 28.8 years. At 8%, it only takes 9, so less than 1/3 the time. At 2.5%, you'll need to have $2 million saved to earn just $50,000 a year. The great news is, at 8%, you only need $625,000 to earn $50,000. So obviously, if you want to earn 100, it's only double that. But here's the neat part. If your money's invested in the right place, you need less than 1/3, and if it's invested in the right place, it's going to get there more than 3 times faster. There are 4 types of mortgage to look at. There are residential seconds that pay good interest rates. There's traditional financing of business properties. You know, one thing people don't know that they don't know is that although residential mortgages have been 5.5% or less for the last 15 years, during that same time frame, commercial mortgages have been 8, 10, 12, and even higher, depending on the type of business it is. Now, people ask, why is that? And the short answer is because banks can. A simple example would be, you know, internet at your house is $29 or $39. A business pays $100, $200, $300 per month. Not because they're using more data, because we have people at home doing Netflix, but they charge banks and businesses charge businesses more because they can afford it and they can't do business without it. We also look at impacted properties, and for the focus today, let's talk about condo redevelopment. So you've got condos or low-rise.
And Jonathan, if I may, let's speed up the process just by, giving them sort of a cursory review. So, again,
sure.
At the risk of being redundant, we explained to you the security of having a deed of land. We're going to walk clients through all of this. How do you secure the property? Your name is on title. It's locked in for 3 years. We're going to walk them through all of the mortgage case studies. For example, understanding how a developer makes money and how we can be involved as a bank, how secure it is. And real-life examples of value on, for example, farmland before development at $13,000 an acre, farmland after development and after zoning, rather, $148 an acre. We'll talk about how, consolidation or aggregating lots to put up a development increases the value of a property, and really all of these opportunities, impacted properties or rezoning, how is our money secure, how does it work, and why, people continually ask, why is Canada's real estate market so solid, and isn't the same thing going to happen in the U.S.? The same thing happened in Canada has happened in the U.S. We'll explain why all things point to Canada being the most secure place in the world to invest. And at the end of the day, our job really to you that are listening right now and to clients is we're not salespeople. We're educators. We will educate people about the opportunity, and all we do is sort and qualify. Who's qualified? Who's interested? Who wants more information? There's no hard sell. There's no hard pitch. Would you agree, Jonathan?
Oh, precisely. I mean, that's why it takes about an hour, because we literally teach them how the process works, and frankly, it's not for everyone. Those that want to do it, we'll show them the safest way to get the most secure returns.
Mm-hmm. So in summary, for everyone that's listening in, obviously if you've got money in your RSP and you'd like a secure return, this could be definitely a viable investment for you personally. As well, you got to ask yourself, hey, how many people do I know that would like a higher return? You'd be doing them a favor, and in the process, earning a commission for yourself. And also, you got to remember this, folks, is you put somebody into a 3-year investment, you earn your 4%. Well, guess what happens in year 4? Well, they get their money back, and in most cases, they're going to want to reinvest. Well, guess what? You're locked in. You're registered as being the agent for that client. They invest again. It's usually more money because they've earned money. You get another 4%. And they tell friends. You also get paid. So it's a very, very unique opportunity. And at this point, all you got to do is write down this number. Call 416-366-9090 or send us an email, info@reccanada.com. If you're interested in finding out more for yourself, or you want to register your clients for our next consumer seminar. And as well, everyone that registers will also be added to our mastermind network. It's a GTA network designed specifically for realtors and mortgage brokers. Membership is free. And what we'll do is we'll update you about RRSP-eligible real estate investments like the one we've been talking about today. We'll update you about new condo projects before they're offered to the general real estate agent population, and additional training seminars designed strictly to help you generate more business. And we all help each other out. It's a win-win-win. Again, call 416-366-9090 or email info@reccanada.com. Thanks to Jonathan Weaver with RRSP Safe Haven. Jonathan, thank you so much for being on the call today.
Delighted to be there, and I look forward to meeting the people who are interested at our next seminar.
Absolutely. We'll see you at the next seminar. This is Simon Giannini with the Real Estate Talk Show, giving you the inside scoop on all things real estate. Have a great day, guys.